let's wrap up with this. This is everybody's favorite topic, and I assure you, you probably find something out or hear something here from Ewok or I in this conversation that you didn't know before. And a huge disclaimer: we are not tax professionals. We are not tax attorneys. We just do taxes, much like you, or as you should be anyway. But talking about crypto taxes, hey, it's December. We're going to start worrying about this stuff probably in the next 6 weeks to April of next year here in the US, obviously. So really just talking about what our process is and answering maybe some questions in terms of sharing what we've done in the past and kind of best practices when it comes to crypto reporting and stuff. So first off, Ewok, I'll let you take the lead on this and then we can just have a conversation. But first off, of the many crypto friendly tax services that there are, and I'm not talking about like, Tax Act or TurboTax. Those are like your traditional taxes. I use TurboTax, but those are just kind of your like traditional ones in the United States for regular income or whatever. But in terms of the crypto platforms themselves that can help you out, what is it that you have used and had a lot of success with, and what can you tell us about it?
Well, I think we've talked about it before, but we both use Koinly as a platform. Koinly with a K, Koinly. And they do a pretty good job of sorting out your transactions, dealing with your hex stakes, things like that. And they recently added Pulse Chain after several people had asked them. So there's a fair amount of people that are using it. Now, there was a problem recently with the Block Explorer, because the link that was scan.pulsechain.com that was linked to the syncing of your wallet, they moved that scan.pulsechain.com to an IPFS link. Koinly did not update that on their side yet, so it's hard to sync your wallets in PulseChain, but they have added it. It is a good tool to use. So we both, like I said, we both use it and like it. And until there is something better, which, I've heard there are a couple different things that are in the works, but just haven't been released yet.
Yeah. And they do a great job. I mean, like, as soon as you found out about the link to Pulse Scan being broken on there, now they do have Pulse Chain on there, as you said, as a blockchain. So you do have that on there. But after the IPFS thing happened, they didn't have access to the actual correct Pulse Scan now. You and I both submitted tickets, so I'm sure they'll get that corrected. But yeah, for anybody who hasn't used Koinly, and I can't speak for any other services because I haven't used them, I've heard of other ones. We can only talk about what we've used. But you can literally just put in your wallet addresses in there. It'll just run transactions back to the beginning of time, whatever you request. The same with your exchanges, which you will want to do, because remember, like, you're not just worrying about what did I do in 2023? We've all been down now for 2 years in terms of the prices of everything. You want to make sure that your long-term capital gains, if and when you ever get any in this market, are long-term capital gains, not short-term capital gains. So you need, if your question is like, well, should I really put like my Coinbase API key or my Coinbase history or Kraken history from like 2017 the whole way to now on there? Yes, would be the answer to that. Because if you've held something for over a year, that falls in the US under long-term capital gains, which are only 15% if memory serves. And anything other than that would be short-term capital gains, and you would be taxed at whatever your tax bracket is. So you want to make sure everything is accounted for those reasons, because if you have been a hodler and suffered through these markets, you want to make sure you get rewarded with, I mean, you're still having money taken from you, but you want to make sure you get rewarded by having less money taken from you than the maximum you can get screwed out of. So,
and another little tip, this time of year, especially, if you did happen to buy some assets at a lot higher of a price, might not be a bad idea to sell them now, harvest your losses, and buy them right back. I know with the stock market, they make you wait a month or so. You can't really harvest it like that, but crypto, there is no law to do that right now. So technically you could sell and then turn around and buy back in later or tomorrow, even if you wanted to wait a day. But that way you could capture your losses at least as a offset if you did have some gains as well. So
Mhm.
it is that time of year to be thinking about things like that. Again, I would definitely talk to your accountant or advisor or somebody to make sure that you're not, messing anything else up. But that is also a strategy that, like I say, approaching the end of the year, you want to think about those type of things.
And same with taking profits as well. I mean, again, not that anybody's in any huge position to do that, but if you are, you may want to decide like, do I want to take them in 2023? Do I want to take them in 2024? It's just all things that you will have to decide for
Yeah,
yourself anyway. And when you do that, set aside whatever, a quarter of it up to probably a third of it, potentially for taxes. And if you overcount how much you'll need, you can just use that to DCA back in later on or something like
there you
that.
go.
Talk about this Ewok because this I know is something that you know a lot about from using Koinly in the past. But when it comes to since this ecosystem, people are going to be staking Hex a lot. How do you designate money? I should say Hex that you received back from your Hex mints, stakes, whatever you want to call them, when you do claim those. How do you designate those on there? Because is it just regular income or is it counted as something else, the yield that you receive back from those hex stakes?
Well, there are considered different people consider them different ways. So you really, again, you have to talk to somebody. On Coinly, though, there is um, a manual button that you can hit to change the classification.
Right.
When I make a stake, I consider that a sent to pool type of transaction. And then when I claim a stake, there is a received from pool. So
Right.
if you classify it that way, it does affect your income a little bit because you're not really taking. Well, again, it's a fine line. I'm I don't want to be the
You're not
professional that
giving advice. I just was
no,
interested in what you've done yourself. I mean,
right.
you by
So
no means
that's
are you
how I
telling anyone what
classify
to do.
them. And Mountain Crypto Advisors, they handle that. I use Brookhaven tax advisors,
Mhm.
so they are the ones that are filling it out and doing it. So if there's an audit, they handle it.
Yeah. Yeah.
Essentially, so but that's how we have decided to classify them as a pooled transaction where I'm not really cashing out. Um, there's money going into a pool, there's money coming out of a pool, or actually hex going into a pool, hex coming out of a pool, and usually hex going right back into the pool. So there isn't really any. Now, if I were to sell that for USD, USDC, or whatever it may
Right.
be, then there's my taxable transaction. But as far as staking, unstaking, restaking, it's classified a little bit differently. Or you can if you have the tax advisor to do it for you. So that's
Yeah.
how I do it.
Yeah, and I've done it that way in the past as well. The pool tool that they have on there. But I mean, it is great. I mean, you just have to plug your wallets in, have them refresh for whatever duration of time you want to, and you'll be on your way. Essentially, at the end of it, it'll give you an Excel sheet that you can get everything from. I think it costs. Last I remember, it depends on how many transactions you have.
Right.
So if you're like a super degen trader, the cost is going to be higher than if you're just kind of hodling. But yeah, I mean, it's your
But still
standard
not bad. If you have that many
oh,
transactions, I think you may be paying like 300, $400 for the year.
at the most. I don't even think it's
Um,
that much.
if you're
Yeah.
under 100 transactions, I think it's only $79 or something like that.
Yeah.
And then anywhere in between, you might be paying 150. Anywhere
Yeah.
between like I don't know, 150 and 500 transactions or something like that through the year. So yeah,
Right.
it's not bad. It's a decent deal. They do give you the opportunity to break down the transactions, um, claim them, or classify them how you want,
Yeah.
and it's definitely helpful. Does a good job.
Yeah. Yeah, I think they have a good balance of automating things and giving
Mhm.
you options, like you said, Ewok.
Yeah. Yep.
As long as you feel comfortable with those options and have the advice from a tax professional to select certain options
Yeah.
anyway. So,
I will make a recommendation though. If you do have a lot of transactions, I would make a habit of checking in about once a month, beginning of the month, whatever. That way you're not going back and trying to remember what the hell you did in January.
mm,
You can usually remember what you've done in the past couple weeks. But if there's a lot of transactions and you're looking now and being like, what the heck was that
what
from
is this?
March? What's
Yeah,
that from
I've been
March?
there.
I don't even remember doing that. So it is a good idea. The more you have now, if you're just staking on staking and something like that, but don't forget, there's airdrops. There's a lot of things. There's not only with your hex stakes, are you claiming your hedron? Are you claiming your communist token? So all
Yeah,
of those become transactions, and when you claim those, they are airdrops because they're technically a free uh, coin that was given to you when you did something else. So
yeah.
the first time they're at least, and then when you stake them again back to the received from pool and sent to pool. So
Yeah. Yeah, I think you'll usually be covered there. Usually the stuff that I run into is kind of your basic tax stuff where, we all have an issue where we can't figure it out for a little while. But for me, it's always like some buy of something doesn't trace its way back to when I initially put
right,
like USDC on Coinbase. So the whole transaction line is missing.
yeah,
So that's an important thing because it'll look like you were just given like airdropped something or something. You want to make sure that your initial capital is in there. So there's that trace of like, this is money
right,
I put in. This
right,
is when I had it in until this is when I sold or didn't sell, rather than I just like received this money.
right.
That's
Because it's
something
the
I run
difference of
into.
a zero and a dollar, right?
Yeah,
Starting at a zero, so you're paying full gains rather than you actually purchased $1 worth of USDC. You want to start at that point at least.
right. Something you wanted to bring up, Ewok, and I don't know if you know the answer to this or it was just a question that you had or just wanted to kind of discuss, but you also brought up when it comes to liquid loans for this
Mhm.
during tax time. You made the point that loans are not taxable,
Right.
but the liquidations would be taxable, right?
Correct. Yes, if you take a loan out, you can go buy a car. That is
Mhm.
tax-free money, and as long as you pay it back, you're fine. It's like borrowing money from the bank. However, if you don't back up and collateralize your loan enough, and you get liquidated, that liquidation is a taxable event. So, depending
Mhm.
on where you're at, all countries are different. If you're not in the United States or wherever, jurisdictions are different and look into it. But yeah, borrowing money and using it to purchase something is not really a taxable event in the United States. However, getting liquidated is. So just be
Yeah.
careful.
And that does make sense because it is a decision that you made, to put that trade in and ultimately get liquidated. So
Right.
that does make sense. So a lot of food for thought. Obviously, it's a little bit more complex when it comes to crypto, but thankfully we do have these tools. And Mr. Chink said it earlier, I believe. Even Koinly, not all these different places, these different tax softwares for crypto. They don't know or have all the answers to how the IRS, yeah, there we go, will view things. It is still the Wild West out
Yeah.
here. Yeah. Maybe not as much as it used to be, but it still is. So,
Yep.
yeah, just the way you designate things, just be careful. But, chances are you're going to be fine. So, I've
Well,
never really
as
ran
long
into
as you're reporting, and you're reporting on your transactions, that's more what they want to see. It's the people that they know that are doing stuff that aren't reporting anything.
right. Yeah.
You will get some benefit of the doubt because there is a fine line, or not a fine line, but there is a lack of clarity, I guess. As long as you're reporting things and doing the best you can, I think they're going to be happy with that.